Normally, when the stock goes below the level, we consider it as a fake breakout. Now question, is this actually a fake breakout or it's not a fake breakout? How can I differentiate between these two? Welcome everyone to a new educational video where I'm going to show you how I find strong and obvious levels and how these strong and obvious levels can be incorporated into your day trading strategy. I'm going to explain this recapping a trade that I took last Thursday on NVIDIA. First of all, let me explain why exactly I chose NVIDIA last Thursday. One of the main reasons is NVIDIA gapped up to all-time high. Most of you already know that I don't love playing gappers. The reason behind that is when the stock gaps, most of the move is already done after hours and in the pre-market. I use the average true range a lot in my trading strategies just to understand where exactly I can put my target. And when the stock gaps, the ATR is already consumed because the ATR is calculated from the previous day close. However, I made an exception for NVIDIA, and the main reason, like I mentioned, the gap to all-time high, and the second reason, and this is actually the main reason, the fact that it is opening closer to a strong level on the daily chart. You can see how obvious this strong level on the daily chart, and if you check the 60-minute chart, this level is even more obvious. When a level is acting as a resistance and the stock clears this resistance area, this level could start acting as a level of support and we could expect a bounce before the continuation, and that's what I expected on NVIDIA. Let's go to trading terminal replay feature and I'll show you how I executed this trade around this level real time and what I could have done to make it better. So there it is, NVIDIA is opening. That is the level that I'm looking at, 745.26. Normally when the stock gaps more than the average true range, I don't look for trend continuations. Therefore, I do not look for playing breakouts because I don't know where exactly to place my target when I play a breakout. But I can play these bounces from levels of support and resistance to decide where exactly to scalp it between the channels or the ranges. You could see that NVIDIA, it went to this level, it held the level, and that kind of gave me the bias. I want to play this thing to the long side. The level is holding, and because it's after a red candle, I wanted to be a little bit more careful, and I wanted to see a bigger wick to the downside, basically a sell-off or a fake break before I jump into the long side. Instead, this thing just squeezed to the upside. I missed the move. Missing a move is part of trading. If the stock just goes without you, totally fine. We had the plan worked, but without us. I see that the price goes back down again closer to the level, and it gives me another opportunity. And this time it actually gives me the breakout that I wanted to see. Basically the fake breakout. Normally when the stock goes below the level, we consider it as a fake breakout. Now question, is this actually a fake breakout or it's not a fake breakout? How can I differentiate between these two? If the stock breaks and continues selling off, I'm not gonna play it. My plan is to play it to the long side. It broke to the downside, no regrets. If the stock breaks and it recovers, that means that this is a fake breakout. You could see that there is a level around here or a zone around here in the pre-market that is kind of respected. We broke below it and we recovered. When I play after fake breakouts, I don't use the low of the fake breakout as my stop loss. I use the closest next thing, which is this one, as my new stop loss. What are the targets? Like I told you, we're scalping. We just play between levels. And the first target for me was around 756 because that is a level from the pre-market. I left some of my position for a potential bigger run. What is my next target? My next target would be this level around here, which is around 761.40ish. And my final target would be around 770 if it reaches that level. So let's see what's happening just for a few seconds before we move on. The price is going, it's getting closer to the level that I'm looking for, 761.40ish, and we take more partials. Final target around 770. At this stage, I move my stop loss to break even because this is not a trend trade. This is just simply a scalp strategy where we utilize support and resistance levels along with the news, along with the strategy that we usually trade. So that's basically it, guys. This is how I use levels. The first thing I usually do, similar to any other strategy and similar to my explanation on my previous videos, is I find a stock and I try to build a bias where the stock is more likely going to go to. Looking at the 60-minute chart on NVIDIA after the gap, I realized that we're more likely going to go to the long side. This by itself is not enough for me to execute a trade to the long side. I need to find a zone, an area, a level where I can play it from. And on gappers, I play only if the level is obvious. It's so clean. Even a blind person can see it. Other than that, I just skip it. Finally, I want to see how the price behaves around this level. Sometimes it holds the level and it just goes without me. In this case, no regrets. You don't need to be in every single trade that is setting up. You just need to be in a few of them. A couple trades a week that are A+ would be more than enough for you to hit your weekly goal. Once I confirm that the level held, it gives me the entry criteria. I jump in and I partial around small pre-market levels. I hope you enjoyed this video. If you did, hit the like button, share and subscribe to our channel, and I'll talk to you in the next video.